Hello, everybody. Welcome back to Beer and Money. My name is Ryan Burklo, and on today's episode, we're going to be talking about small thinking versus big thinking. And what I mean by this is, I think oftentimes when we are reading media news and they're talking about savings, they're like, hey, you should save every penny, like stop going to Starbucks, and this is the amount of money that you'll have in retirement. And that train of thought, while it maybe gets us in good habits, in the grand scheme of things, not going to Starbucks doesn't make or break your financial picture in the long run. Maybe we've got to break certain habits of spending, but the Starbucks, like that $50 a week pickup, is not that big a deal in the long run. And we need to start thinking bigger picture. So today we're going to go through the numbers to show you why that actually is the case. So let's dive right in here today. So I'm going to share my screen. For those of you who have not checked us out on YouTube, head over to the YouTube channel or just go to beardmoney.net and the YouTube video will also be there. So that way you can see the visual side of the numbers that I'll be going through today. So let's jump right in here. So let's go to big picture thinking versus small picture thinking. Okay. And so what I'm talking about here is this. Okay, if we stop going to Starbucks, what does that really look like? Okay, well, let's just take a look here then. If we're looking at a 20-year period of time, okay, and what is Starbucks actually saving? So let's just say Starbucks is saving, say here's our Starbucks, okay, and we're currently spending $50 a week. So $50 a week times 52, so that's $2,600, $2,600, okay? And let's just say we're now going to save the additional $2,600. So if we started picking that up and we got a 5% or 6, I'll put it at 6% rate of return on our money, well, what do we pick up? So over 20-year periods of time, if you're able to save $2,600 extra per year and you got a 6% rate of return, congrats. It's $101,000. Most of the time, $100,000 does not change our financial world or change our lifestyle. It's not that big a deal. That's small picture thinking. That's really small thinking. And I'm not saying that that's bad. I am saying that maybe that's a starting point, but it's easier, and it might be actually an easier step to start here, but let's start to address the bigger picture thinking. And here's what I mean by bigger picture thinking. Let's just think about the amount of money that goes through our fingertips in any given year and how much of it we actually get to keep. So let's just say we're working with a family and they have a household income of $300,000 per year. Okay, so $300,000 per year, family making that much money, they're going to have an average income increase of roughly about 4 to 5% over the next 20-year period of time, right? It may not be 4 or 5% every year. So maybe 5 years in, they get a huge pay increase and it jumps by 10% or 15%. But over time, the average is 5%. So they're making $300,000 a year. And let's just say their lifestyle, or what they're not keeping, is $270,000, meaning they're saving $30,000 per year. So they're saving 10% of their income. So think about that. This person makes $300,000 a year. They're saving 10% of their income, so that's $30,000. Okay? So they're spending $270,000 is what that means. So all that is 300 minus 30, that's $270,000. Now, what do most people do? As their income goes up, so does their lifestyle. So most people, as their incomes average up is 5%, so is their lifestyle. It's also going up by 5%. So what this looks like over time, so it's $30,000 per year. Now, not every year, because as their income goes up, the saving goes up, but so does their lifestyle, right? So throughout time, let me go down to the details here. Here's what's really interesting. So as we go through time here, I had to change the numbers here. They're spending $270. The next year, they're making $315, but they're spending $283. If you did the math here, let's go all the way down. Year 20, they're making $758,000 per year. They're spending $682,000. If you did the math of those two numbers, It's 10%. They're still saving 10% of their income. And what that breaks down to is, well, now if that 10% of their income is being saved and it gets a 6% rate of return, 20 years down the line, they've got $1.7 million. To be exact, $1,761,204, if I could speak today. That's what they're left, right? Now, it's not including Social Security, not including any homes or whatnot. This is just what they're saving into the stock market type of an account or their 401k, okay? Here is a big picture adjustment. And I ask this question all the time. If this person, if I ask this person, hey, would you notice, like as opposed to your lifestyle increasing by 5% per year, let's just say you increased it by 4% per year. So just a 1% difference. Would you notice that 1%? The answer is almost always no. Because think about this, $300,000, 1% is $3,000, right? That's not a lot of money. And that does not affect their lifestyle. And for those of you listening, whatever money you're making, would 1% change your lifestyle dramatically in a really negative way? And the answer I always get is unequivocally no. What does that change? Well, it changes everything dramatically and in a huge way. Keep in mind there, we're on pace for 1.761. If just that 1% difference over the next 20 years, now they're at $3 million. So they got almost $1.3 million in addition just by that 1% difference. This is a big picture look. And how it breaks down to is this. They're still making $758,000 year 20. But let's look at their lifestyle. Their lifestyle is only $568,000. And if we did the math here, if we did $568,849 and we divide that by 758,085, that is a 25%, just shy of 25% savings rate. Think about that. That's huge. They started at saving 10%, and over time they grew it to 25% savings rate. And then take that to another level, their lifestyle is $568,000. Now, I'm not here to argue whether or not the $3 million is going to last them in retirement. The point of this conversation is a 1% difference in lifestyle had a $1.3 million effect on their assets. Rather than going back to my Starbucks example, saving $50 a week and getting the same rate of return was only $100,000. So we always got to take a look at the bigger picture. And just, this is a small step from a standpoint of percentage, a 1% difference, but they've got to take that next step of how do they capture it. And that's when Alex and I have spoken into this before. It's called a wealth building account, where we're able to create a system to automatically capture all of our income coming in the door, and it spits out our lifestyle for us, and we get to capture this 1% automatically for. And that's in episode 186. Definitely go check that episode out where we explain the wealth building account so that you can do something similar to this. A small thing, small adjustment to your finances has a dramatic impact in your financial wealth. I hope this episode is valuable for you today. If you have any questions from today, reach out and go to beerandmoney.net, and at the top of that page, that's where you can ask us. There's a contact us. You can ask us any questions that might have come up. Look, we started this podcast to help you think differently about your money. And hopefully in today's episode, this is a huge difference. A 1% difference created $1 million+ of assets. What would that do for you and your family? Hope this was a good one.
This podcast is for informational purposes only and is not to be construed as tax, legal, or investment advice. Although the information has been gathered from sources believed to be reliable, please note that individual situations can vary. Therefore, the information should be relied upon only when coordinated with individual professional advice. Guest speakers and their firms are not affiliated with or endorsed by Park Avenue Securities, Guardian, or Quantified Financial Partners, and opinions stated are their own. Guardian, its subsidiaries, agents, and employees do not provide tax, legal, or accounting advice. Consult your tax, legal, or accounting professional regarding your individual situation. All investments and investment strategies contain risk and may lose value. This material is intended for general public use. By providing this content, Park Avenue Securities LLC is not undertaking to provide investment advice or a recommendation for any specific individual or situation, or to otherwise act in a fiduciary capacity. Please contact a financial representative for guidance and information that is specific to your individual situation. Ryan and Alex are registered representatives and financial advisors of Park Avenue Securities LLC, OSJ 200 Market Street, Suite 1850, Portland, Oregon 97201. Phone number 503-221-1226. Securities products and advisory services offered through Park Avenue Securities, member FINRA, SIPC. Financial representatives of the Guardian Life Insurance Company of America, Guardian, New York, New York. Park Avenue Securities is a wholly owned subsidiary of Guardian. Quantified Financial Partners is not an affiliate or subsidiary of Park Avenue Securities or Guardian. Ryan Burklo, CA Insurance License Number 0K24924. Alexander Collins, CA Insurance License Number 0H24806.
8253584.1, expiration date August 2027.